And throughout that trend, you have huge earnings and sales acceleration, even a quadruple digit quarter, but eventually you can't sustain.
A 12% intraday move is insane. So imagine if you're short that day, you're getting crushed. So when the news is overwhelmingly bullish and the market can't go higher, that's a huge red flag. And then vice versa, when the news is overwhelmingly bearish and the market can't go lower, you might be looking at a bottom here.
500% lower are starting to buy those pullbacks, and then they push the price up, then institutions sell more into the market, and that's how you create that rounded top, and eventually.
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground, the show where we break down trading. I'm your host, Sam, and tonight we've got another very special episode coming up. I'm being joined by Connor and Ted from Revere Asset Management. Everyone's been asking for more trade analysis, more screen sharing, and that is exactly what tonight's show is. Ted goes deep with stage analysis, and Connor breaks down when the top might be in. You're not going to want to miss this. Now let's get into the show. Please welcome to the show. We've got Ted and Connor back from Revere Asset Management. How are you both doing?
Good. It's a pleasure to
Fantastic.
be back on. We had a great time last
Excited to
time.
be back on.
Good. And I mean, we've been messaging a little bit over the weekend. The first thing that we have to talk about, so just for context, we're recording on the 14th of April, the day after Rory McIlroy just won the Grand Slam. Only the sixth person in history to win it. He just won the Masters yesterday. Connor, it was insane.
Yeah, that was one of the best final rounds in the Masters that I've seen, and it's just good to see it all come together for Rory. It's a long time coming. I use that stock market quote, "Too big to fail." That's how I felt for him on Sunday.
I just felt for every shot I felt, and then when he put one in the water, I was just, and it was so. I personally I don't gamble. I mean, unless it's in my day job, but I had it just as part of my golf group. We had a sweepstake, and I had Bryson, so I would have won money if Bryson won. I was still cheering for Rory. I still wanted Rory to win. Ted, what did you think?
So I'm traditionally not like a golfer, but I did watch the Masters too, and I just love champion stories of any sport. And his story kind of reminds me of Messi going for the World Cup for like 10, 12 years. So it was nice to see, and I could definitely feel the emotions that he had when he won the Masters and completed the Grand Slam. So it was inspiring to see.
Yeah, absolutely. And I always think like with there are sportsmen that just transcend any sport, like Messi, Ronaldo, LeBron James, like Serena Williams, and like obviously
Yeah.
got Tiger Woods in golf. And now I think like everyone in the world is going to. I mean, they probably did already, but if not, it's like it's Rory McIlroy.
Yeah, definitely.
No, I mean, like, you could probably tell by my smile. I was just, it was on to like, I mean, of all days, like I was like, I need to have a good night's sleep. I got a really big Monday coming up. Typical. We always go to a playoff whenever that's the case. That's literally that's just what happens, and I'm up to like 2 o'clock in the morning watching it. But anyways, there's a lot we want to talk about tonight. I mean, you two for me are like, and I'm not exaggerating at all. You two for me are like one of the reasons to have Twitter. Just the content that you put out there, the thoughtful tweets that you put out there. I mean, it's obviously like everyone talks like about the negatives of Twitter, but like you two and like your content is a real shining example of why it's such a great platform. And that's one of the things that's inspired like tonight's conversation is just some of your tweets over the past year or so that I've just picked up and been like, right, I got to talk to these guys about. One of the things we got to talk about is we got to talk about like 2024, Nvidia, semiconductors, just crazy. Then we got to talk about how actually we just unwound in a few sessions, all of 2024. And then we got to talk about pick and bottoms. There's tons to talk about. I want to kick things off by talking about semiconductors, though, Connor. I mean, when I think of 2024, I think it was the year of, as much as everything's obviously based around semiconductors, I just think it's the year of semiconductors. I think it's the year of, obviously, when you think of semiconductors, you think of Nvidia. Firstly, do you think that's fair?
Oh, definitely. definitely. And every super strong bull market has that huge underlying theme, right? 2024 was semiconductors, and then looking back at 2020, it was the ARC style names that benefited from COVID. So yeah, every bull market in history has that one sector that's leads the market higher for the duration of the run.
Yeah, absolutely. And I'm keen, Ted, I got to pick your brains. And this is one of the tweets that I was talking about. On December the 13th, you tweeted, "I would bet a lot of money Druckenmiller would agree that Nvidia looks like it's topping out here for the cycle." That was the top.
Yeah, so I mean, about Druckenmiller, he's one of my favorite traders in the entire world. And I tweeted that shortly after I watched his interview with Norges Investment Bank, I think it's a Swedish bank. And one clip really stuck out to me. I mean, the guy's worth $7 billion, and he's talking about technical analysis. Because if you guys are familiar with Druckenmiller, he grew up first as a technician, and then eventually he incorporated fundamentals, macro, and became this world-class, famous global macro investor. And in that clip, he talked about how he identifies tops in stocks through like a technician's view, and he describes it as the rate of change of a stock decreases. And for those that understand math, it's the second derivative, but we don't need to get into that. And as the rate of change decreases, you'll start to see its stock starting to round out. And eventually, that just signals that there's distribution. Institutions are selling into the market. Uh, Probably late buyers that miss Nvidia
Mhm.
500% lower are starting to buy those pullbacks, and then they push the price up. Then institutions sell more into the market, and that's how you create that rounded top. And eventually, when the selling pressure overwhelms the buying pressure, that's when the stock tops and breaks into a downtrend. And later on, we can get to stage analysis, which is my favorite technical analysis method for swing and position traders to always keep you in line with the direction of the markets.
Yeah, absolutely. And before we get into stage analysis, Connor, anything to add to that?
No, I think he's spot on. I can pull up a chart of the SOX and kind of show what it was showing if we want.
Yeah,
Perfect.
absolutely.
So yeah, what Ted mentioned, I think, is many characteristics of a top, and I think there's a couple other things that I want to talk about. And first, the best shorts typically are the biggest winners of the bull market. So semiconductors, we can just make this a little longer. So as we can see, off the 2022 low, this was the leading sector. I mean, unbelievable move here. And, semiconductors were the stocks to be in. During this period, you had handful of names making multi-100% moves. Nvidia, SMCI, Broadcom, Marvell, the list goes on. And then on the flip side, when these start to top, the best shorts are usually the most highly institutional owned. So the semiconductor index topped back here in 2024, and that was before the market. And one thing about shorting is the optimal shorting spot is typically 6 to 12 months after a high has been put in. And some characteristics that you tend to see. So, right, this was the high, and then you get one of my favorite ways is see multiple failed rally attempts above the 50-day moving average. So I marked all of these out right here, and you can see the inexperienced investor might think this is forming a base, right? Rightfully so. But after such a huge run, this is a faulty stage 3, stage 4 base in the making. And then you get harsh breaks off the highs. That's another red flag on volume, rallies back up. And again, no price, price isn't progressing to the upside, and it's just showing a lot of distribution. So you get these multiple failed rally attempts above the 50-day moving average. I'll just clear these. And then another final nail in the coffin is when the 50-day gets below the 200-day moving average. And that's pretty much the market telling you, the trend, the momentum is pretty much done for the time being. And during this period, as this is just the ETF, as this was topping out, there was a lot of distribution in individual names. We can look at names like Marvell. These are getting sold off big. Avgo, again, tried to rally up on earnings and then gave the whole move back. You had Nvidia again. This was just a huge late stage base, right? And right here, when Ted tweeted, when all the news is so good and the price can't go up, that's a huge red flag. So back to the semiconductors. And yeah, so as it started to come down, this day right here, this was the day of Nvidia earnings, and it gapped up into all declining moving averages, sold off, and closed low a day. So again, that was another red flag. And you can, just a simple line right here, right? This was basically the neckline of this pattern. And once it broke this pattern, this is when it started to waterfall, and you can see the market was doing the same as well. Now, and we look at the weekly chart right here again. You could argue this was forming head and shoulders top as well. Just make that clear. And that right shoulder was lower as well. And then once it broke the neckline, the selling started to intensify. And another thing is, there was very similar setups in ARK. I talked about how the best shorts are usually the biggest winners of the prior bull market, and this was virtually almost the same exact setup. How ARK broke down, it topped here back in 2021, and then it spent the next 6 to 7 months consolidating that kind of right shoulder. Multiple failed rally attempts above the 50-day moving average. You had the 50-day get below the 200-day moving average, and once it broke that neckline, that's when it saw that's when it went into a stage 4 decline, and prices not even came back to here. So and I'll bring up one more example. I think this is another interesting one. Cisco. This is we'll go back to 2001, and this had almost the same exact setup in 2001. Almost there. Again, this was one of the best stocks to own in the 99 to 2000 bubble. It topped here in 2000, spent the next 6 to 8 months consolidating. Multiple failed rally attempts above the 50-day and the 200-day moving average. And once it broke this shelf, it went into stage 4 and saw a big decline. So, history doesn't always repeat itself, but it often rhymes. And that was kind of the case here with semiconductors. And, not only was this ETF setting up bearish, but like I mentioned, I'm very big on groups. If I'm focused on a stock, there has to be group strength with it. 50 to 60% of a stock's performance is due to the group. And when there was virtually no semiconductors in uptrends when this started to break down. So the likelihood for the sector to go much lower was there. And when it hit 148, this was third gap down in a row. It was short term, pretty oversold, and a rally back up into this 200 level isn't out of the cards. This is another big level right here, so we'll see. But for now, semiconductors are most definitely in stage 4 downtrend, and they're going to need a lot of work and a lot of more participation if they want to get back into leading the market higher.
Yeah, that's incredible. For anyone watching as well, like such a good example of it. If anyone's wondering why are we talking about semiconductors from 2024, well, Connor just gave an example from 2001, wasn't it? Right?
Yep.
Like you said, it repeats itself. And what's the significance? So obviously, it sounds like the 50-day moving average is incredibly important.
Right.
Why?
That's just I use a couple moving averages, right? You have 10-day, 21-day, 50-day, 200-day. And the 50 days more of a medium term trend. And if you look back at some of the biggest winners, they tend to respect the 50-day moving average. That coincides with the 10-week moving average as well. And that's just a good medium term trend of a stock. And it's an easy guardrail if you're trying to hold a stock for many months. Once you get a harsh break of the 50-day moving average, that could be signaling the trend's changing, or it's going into a longer period of consolidation.
And one thing that sort of strikes me immediately is how important it is you really zoomed out as well, because obviously on an intraday level there's going to be information overload, and I think that's often where is it fair to say that's where actually people go wrong a lot of the time?
Definitely. I mean, Zooming out helps a lot for a trend. Especially being a portfolio manager, we're looking to hold things as long as we can, and focusing on the bigger time frames gives you a better picture, especially the weekly charts. And I just switched these. So on the weekly charts, this is the 10, 30, and 40 week moving average, and you can basically see, from this run, this never really broke the 40-week moving average the whole time. Besides here, you got a weak rally up, and then it rejected here on the downside. So, the weekly charts just, yeah, like you said, remove a lot of noise, and especially how erratic the market is these days, just focusing on weekly closes could help a lot in terms of holding something.
Yeah, absolutely. And I'm also interested as well, like if you've touched on the 50-day like exhausting out after you've had that pull. In terms of like deploying risk though, I mean, how are you going to deploy risk? What are you going to risk against? And how do you actually obviously put, capital on the line?
So you're saying if something's like super extended from the 50
Well,
day?
I'm just thinking like if you're talking about whether I guess as well, I guess add, are you actually obviously you've touched on the ETF as well? Is that something you'd actually trade, or is this just a signal for you to then look at obviously like Nvidia, Marvell, and things like that?
Yeah, no. Well, for at Revere, we traded SOXS for this move. So this is the 3 times levered semiconductor short, and you can see I always show the underlying because if a triple ETF gets decayed and whatnot, but you can see as this started to move, this moved from 23 bucks about to $53, and we held this thing for over a month, which was over 100% gain at the highs here. We no longer have this, as you can see, like when the semiconductors bounce, this is when you start to see that 3 times lever really hurt you if it goes the other way. So yeah, we'll use the groups there, the stocks to give a picture, the ETF as well, and then for shorting, especially at Revere, we're in an RIA. So if we're looking to take shorts, it's always going to be with 3 times ETFs. Doesn't have to be 3 times as short ETFs.
Right. Yeah. And in terms of like your actual entry on those, are you?
Yeah.
Sounds like you're waiting for that bounce. Do you then risk the previous highs?
Yeah, so the entry on this, I'll just use the SOX chart because it's a lot easier. But the entry day was right here. And like I mentioned, it was the day that Nvidia reported earnings. And another hallmark of a topping market is news failures, right? When the news is overwhelmingly bullish and the market can't go higher, that's a huge red flag. And then vice versa, when the news is overwhelmingly bearish and the market can't go lower, you might be looking at a bottom here. So I remember this day pretty vividly, right? Nvidia gapped up overnight on earnings. Everyone was super excited, right? Everyone's like, Nvidia's gapping up. This is going to bring semiconductors back. But again, this was just gapping up into declining moving averages. And right off the open, Nvidia started to sell off. That's when we took the SOXS and trimmed some down as it came lower just to manage risk, and then eventually sold the rest down here. So yeah, you got to be quick with these because the 1-day rallies can be pretty vicious, as we saw last week.
Mm-hmm. But yeah, that's an incredible trade, and yeah, well done. Congratulations, that's awesome. Really, it really is. Ted, is there anything at this point you wish to add, or should we come to you in a second for some stage analysis?
Yeah, nothing to add here, but yeah, exactly. I can talk about Nvidia and do a deep dive on stage analysis, the cycle of a market leader, how it bottoms out, goes into the uptrend, the news cycle during the move, during the topping process, and then into the downtrend that we're currently in.
Enjoying this episode? Please hit that subscribe button. Most of our viewers don't subscribe, but the more subscribers we get, the more free content that we can release just for you. Thanks very much. Now let's get back into it. That's the thing. It looks so clean. Like this is like the cleanest looking chart ever. But obviously, like the difficulty is for everyone is actually to realize that in real time. And I can't help but think it's just all about ignoring so much of the noise out there and just focusing on what really matters. I don't know. Is that fair to say?
Totally. Yeah. I mean, the news, everyone's trying to catch the bottom on semiconductors when Price was telling you these are breaking out, are in a stage 3 top, heading into stage 4. So exactly, Price is going to be your best guide. So it's easier said than done, but trying to tune out the noise and just focus on the setup.
Yeah, absolutely. All right, well, over to you then, Ted.
Alrighty, so I currently have a chart of Nvidia on the screen. This is a weekly chart, and I want to start off at the previous high, and we'll go over an entire cycle. So Nvidia topped in about 2021. At this point, Nvidia was just a gaming company. They did really well though. They had great earnings and sales, but eventually the markets caved into the inflation 2022 bear market, where the Federal Reserve hiked interest rates at the fastest pace ever in history. That led to all equities taking a huge dive into this bear market. And you see Nvidia in this downtrend, and this is where I want to introduce the 30 and 40 week moving averages, which is the key, really the key indicator in stage analysis. And on my chart, it's the magenta line and then the white line. And pretty much the alignment and slope of these moving averages will really just act as a guardrail to keep you on the right side of the market. So Nvidia goes through this downtrend. Again, the rate of change of the downtrend starts to slow down a bit, and you can see that by Nvidia breaking through the 10 and 20 week moving averages, which is the red line and the green line. Eventually, the 30, 40 week catches up to price. Price starts oscillating in between these moving averages, and this enables the trend to really just start a stage 1 basing pattern, have the moving averages flatten, and eventually, when you do get a breakout above these 30 and 40 week moving averages, that is what is known as a stage 2 uptrend. And you can pretty safely say that we've entered a new upcycle and it is time to get long. And as you can see, this was a stage 2 breakout here on January 23rd. You go to daily chart all the way back here. That was right here, breaking above this 18.5-ish level. And that's the start of the uptrend. And in an uptrend, the key characteristics of an uptrend, above obviously the 10, 20, 30, 40 week moving averages, all of them are aligned and rising. Price structure, you see higher highs and higher lows. You have linear uptrends followed by constructive, clean and simple digestions right here, like the 6-month base. And in a healthy uptrend, you'll have continuation setups that lead to further linear uptrends. Eventually, just like on the downside, on the upside, it's the opposite. The key movement averages start to catch up the price, and this really just indicates that institutions are starting to distribute the stock because either they think the valuation is too high, they see lower growth in the future, or they just see some other dangers ahead that the regular retail trader might not even see because they have access to all the Wall Street research information. They talk to management, ex-employees, current employees. So they just have a lot more research, innovation, not insider information, but information on the stock. And that's when smart money starts to get out. And as you can see, Nvidia pretty much topped in the summer of 2024. And it briefly made a new high in this October, December area, November area. And you can see these moving averages are catching up the price, flattening, eventually heading to downtrend. And now I want to go on the daily chart because Connor talked about news failures. And I want to point out just a bunch of news failures in NVIDIA, which helped me, quote unquote, call a top in NVIDIA. But if we start right here, this was just this huge move out of this 6-month base. You had this first leg up, and then you gapped up and failed and saw a bearish engulfing candle. Then you based again, and then another time you gapped up and saw this bearish engulfing candle. And so this is starting to point towards some exhaustion. If you look at this chart, this base here is a lot more wider and looser than the preceding bases, and that indicates institutions are distributing into the market and that a topping process has begun. And throughout this base, you can just see there's a lot more erratic action, gap up reversal here, gap up reversal here, another gap up reversal here on August 1st. You have another one here, September 26th. And now we enter this really key zone. And there's so many news failures, as Connor talks about. And what a news failure pretty much is, it's really good news, the best of news sometimes, but the market or the stock fails to make a new high. Or it does, and it comes back in. So on this day, we had earnings, blowout earnings, triple-digit earnings in sales. We briefly made a new all-time high, but closed poorly and back in the base. So that's a failed breakout right there. We chopped around for another few weeks. This was the day another big news failure happened. We ran up into the CES technology event. Again, briefly made a new high and closed straight at the lows of the day. You can't really have a more bearish bar than this, where you pretty much have an opens equals high, where the high of the day equals the opening price. And this pretty much had the low equals close as well. And so this is one of the bearish, most bearish candles you can see. Then we ran up once again and saw another gap up bearish engulfing. Coincidentally, the day before, the DeepSeek gap down, where just a large language model news came out of China that they reportedly created a model far cheaper than ChatGPT's O1 reasoning model, and that really spooked the markets and all of AI stocks. See Nvidia gap down 13% and closed at 17%, and the whole AI theme took a huge hit that day. If you go to VRT, end of the day down 30%. Another name like ALAB down 28%. The SOXS ETF was down 8%. And those are just some of the names. We can go to Avgo as well, down 18%. So just a total news that's not a news failure. That's just a negative piece of news. And you can see the heaviest selling really in months. Once again, we started rallying up.
Ted, just to say,
Yep.
is that first, like just looking at that NVIDIA daily, I think it's good to just emphasize that tops take time. And like the nimble investor is noting all these things that's occurring, faulty bases, news failures. And I think that's the one thing, is that, you know, people think something's gone too high, and it still might not be a good time to short it, because look at all the frustration that NVIDIA had in that, you know, almost a year of really no price appreciation, just chopping around, frustrating a lot.
Exactly. And then we rally back up, and then we have earnings this one day, which Connor talked about. Once again, we saw great earnings numbers, 83% year over year, 78% on sales, gapped up. And once again, one of the most bearish candles you could have, similarly to January 7th. Opens was 1 cent from the high, where the high was 1 cent from the open, and then the close was the dead low of the day. And that is just extremely bearish action. You have 1, 2, 3 big news failures. You have this rounding look that I talked about earlier. You can see if you draw an arc like that, a rounding look indicating the rate of change of the stock really has slowed down. Because if you're to compare it to the uptrend, you can see how linear it is, just trading at a 45-degree angle. And now this rounding top happens, and eventually those 30, 40-week moving averages catch up. They turn sideways, flatten, and then eventually price breaks down. And that's officially the stage 4 downtrend. And just to add on, additionally, the life cycle of growth stock, in the beginning at the bottom, even the numbers are often the worst. You can see preceding the move, we had negative earnings and sales. And eventually you have a surprise quarter, and that sends the stock into stage 2 uptrend. We call that an earnings gapper or an EP. And oftentimes it does take that earnings surprise or news catalyst that catalyzes the new just 1 to 2 year trend. And throughout that trend, you have huge earnings and sales acceleration, even a quadruple digit quarter. But eventually you can't sustain triple digit, mid to high, even quadruple digit growth for years and years. And typically the market leader sees 5 to 6 beat and raise quarters, which is pretty much what Nvidia saw. It actually lasted even a bit longer. And eventually the earnings quarter started decelerating. You can see it went from 1,270% growth to 757 to 650 to 168, 110, 83. And that typically just starts to show that the growth cycle is over for Nvidia, and that coincides with the price action as well. And right now we're in a downtrend.
Yeah, that's super fascinating. And I think what's interesting as well is like how that picture formed over time. Like it didn't require quick reactions or anything like that. It just required staying on top of that trend, the news, and I suppose just being prepared for when actually you do see an entry signal.
Yeah. And you
Yep.
could say the same for the whole run, right? Ted's got that downtrend line, and once it got back above there, you just see the moving average alignment. You had plenty of time to get into Nvidia, and then it had that perfect, 10-month base that led to that huge run in the start of 2024. And now it seems like everyone wants Nvidia after the huge run it had.
Yeah, and I think that's the interesting thing as well. And I know we're going to come on to talking about picking bottoms, but it does seem like everyone gets married to the growth stock of last year.
Exactly.
Definitely.
And yeah, I mean, I don't know. That doesn't sound to be too fruitful. I mean, it is an incredible story, and Joe, it really reminded me actually like the storyline how they pivoted from just being, from being almost like you said, that gaming company that produced graphics cards to being so much more, and then the story that preceded that, and then like you said, we got that to that point where I remember that day so well, where we broke 150, and like the sell. I just remember the sell off being absolutely brutal. I remember everyone thinking that morning that we were going to, leg higher.
Yeah.
Right.
Oh, I mean, it's such an interesting story. I think it's going to be one we analyze for time. So just to bring it up to, obviously, like I said, we're recording on the 14th. So what's the story right now with Nvidia?
The story right now with Nvidia, to me, it's the growth cycle for Nvidia at this point is currently over, and we're currently in a downtrend. You had the death cross happen in this March period, and really it's just a hands-off moment for us, at least our style of managing money for Nvidia. Good news continues to come out, and you're not seeing Nvidia react too much about it. So right now, it's hands off, and we're still watching it because it is still one of the most consequential names and companies in the world. But right now, without price confirmation in a stage 2 uptrend, it's a no-go for us.
Did you know every single Tuesday morning at 8:45 we go live on YouTube with our pre-market broadcast? It's exactly what we do every single day in the room. Hit subscribe so you don't miss it. And do you think there are potentially opportunities to still be looking to short this name as well? I know you mentioned that you'd have to use perhaps a different instrument to do that, but is that something that you'd look at, or is that just not a setup for you guys?
Right. So we tried in this era, we tried some Nvidia short, but the reason why the semiconductor ETF worked better for us and we got frustrated out of the Nvidia name is because during the topping process and even the early stage downtrend of like the most coveted and adored name, people are still going to be aggressively buying the dip, even institutions, even some funds. So it can lead to a lot of frustration. But eventually there will come a point where there could potentially come a point where everyone just starts capitulating and you'll see a nice linear downtrend, just like the uptrend as well. But right now, you could still argue it's still the topping process in a downtrend, but more early stage downtrend where people are still trying to pick a bottom. And that's why for the number one market leader of the last cycle, it can get a little frustrating. That's why we chose the semiconductors ETF because it includes some of the weakest semiconductors as well.
Yeah. And the institutional ownership in Nvidia is just insane. So like that can create huge selling, just how it created huge buying pressure on the way up, all these funds piling in, it works both ways. So if the big institutions start to sell, that's when you could start to see that downside move accelerate.
Yeah, because that's the interesting thing. Like as you zoom out, it still looks extended. There still looks like there could be. I mean, if you were to take the, I mean, perhaps that's the difficulty for a lot of people, including myself, is if you were to take the name out and you were just to look at this as a chart, perhaps you'd be thinking actually there's room for you probably would be thinking there's room for a lot more downside.
Yeah.
Agreed. Yep. Yeah, I also tweeted earlier, it's like a lower probability, but if this bear market continues to materialize, I could potentially see like a 39 to 50 landing spot for Nvidia. But we'll see if that comes true.
Well, we
Because
can.
just some stats, the average market leader when it puts in a secular top drops 72%. And if we do measure that, 72% lands it at this 40 to 50 level. So we'll see if that happens to Nvidia. It's happened to coveted names like Cisco, like Connor showed in the past, that ran for entire decades, seeing triple digits quarter after quarter, and eventually everyone piled in. People thought their networking equipment to build out the internet would be a forever demanded product, and eventually in innovation and tech, you end up at this point where it's already maximized most of its value. The internet was built out. They needed less networking equipment. And since it traded up on growth, once investors and institutions realize that growth isn't there in the future anymore, they sell the stock. And that could happen to Nvidia too. We'll see what happens.
Yeah, and now we've got it on camera as well. So I mean, I can clip that, and we can either, well, I mean, we can either forget about it, or we can bring it out in a few months and be like, this is what Ted said. And now just looking like just what you've got a chart up as well. I'm just interested, like. Obviously, like I know you guys, you're always following where like that money flow is coming from institutions. We're in a really interesting cycle at the moment, heavy news driven. There's so much uncertainty, but are there any potential positive growth stories out there right now?
One we are looking at, and it's still relatively sloppy, is Palantir.
Mm.
We saw the indexes, the Nasdaq, the S&P, and majority of the Mag 7 stocks completely collapse below their 200-day moving averages and 40-week moving averages. But this still held the 30-week moving averages, which is still rising in the 150-day. So this is a potential growth story we are watching. You might, depending on who you talk to, some valuation people might say it's completely overvalued. We don't really consider that too much, but this is one we are watching, and it's showing some decent growth, especially in the estimates ahead.
And just on that, like it sounds like you've just had an intensely busy cycle. Sounds like you probably had a lot of risk. You've been in like a really risk-on environment for you guys. Obviously, it sounds like you're shifting now. So, I mean, how your behavior shifting on a day-to-day basis, or is it kind of sitting on your hands and waiting?
Yeah.
Exactly. Yeah, it's Connor. You got this.
Yeah, they're definitely sitting on your hands being patient, but the one thing is, I've seen it before, is when things look so bad, that could be the time that you're going to bottom. So if you're taking shortcuts with your screening, not keeping up with lists, you're going to fall behind because the stocks always bottom before the indexes. And we saw that in 2023. I vividly remember, the market was making new lows, and then I saw a bunch of cybersecurity stocks. I saw CrowdStrike, Zscaler, CYBR, all those setting up, and that's my main clue for if the market's going to bottom. When I see, a tech sector or just, a handful of industry groups setting up to lead the market higher, and that's just always been my best gauge for analyzing the market is where the groups, how many stocks are in the groups. And, if you think about the market right now, right, Palantir looks pretty good. That's kind of a lone soldier. Some of these biotech names, TGTX looks good. That's held up better than most of the market. WGS, that's another one. ADMA is another one that Ted's bringing it up, that broke out, kind of breaking out today. So, right, but this is biotech. Like, these aren't really going to take the market that much higher, but they are, a group holding up. And on the topic of cybersecurity, CrowdStrike looks all right. That's trying to put in a double bottom base. If you pull that up, Ted. crowd looks pretty good. It still needs some time. It's a little sloppy. You can look at Zscaler or ZS. That's another one. Okta is another one. I was really excited about Okta. I thought this was a beach ball underwater. You can see the market was going down, and this gapped up on huge volume on earnings out of a stage one base, put in a day two higher high, pulled back, kind of normal action, and then, nothing's going to be able to hold up really when the market's getting crushed like it was. So, definitely being patient, but always keeping the list ready, and always, where's the money flowing, what sectors are starting to set up, and, there's, yeah.
Yeah. And to add on to that, you talked about like what we're doing in the portfolios. Right at this current stage, we're pretty much sitting on our hands, heavy cash, some money markets. But even just a few weeks ago, we did have like 25% net short. And some of those names included, Connor mentioned the SOXS position. We also shorted some Magnificent Seven, and we used FNGS as our proxy. Pretty much just simple. Had the huge failed breakout, rallied into the cluster moving averages, formed a bear flag, and we just took some FNGD, which is a 3x leverage on March 27th. Oh, sorry, 1 second. FNGD, March 27th, and we just sold it into this Friday. We didn't end up holding it over the weekend into this exhaustion day, but we were just happy with the gain, shorting the Mag 7. So that's kind of what we were doing. And after these exhaustion candles in the S&P 500, in the Mag 7, we've just been sitting on our hands recently. And our expectation is that there's going to be some chop in the short-term future.
Yeah, certainly an interesting time. And Connor, I know we sort of touched on it slightly, but you both tweeted actually on picking bottoms and how it's pretty much a fool's errand. But at some point, there are going to be some signals, some indicators. Would you be able to just like elaborate?
Yeah. So
get to your screen.
Yeah. You go back to my screen. So on Tuesday, I believe on the 8th, I made a big tweet on a bunch of breath signals, and I basically a bunch of things I look for that might signal that the market's trying to bottom out. And there's a handful of these breath charts that I look at, and actually I got featured on Market Watch, which was pretty cool.
That's cool.
Yeah, so that was a pleasant surprise. But some things that I look at is percent of stocks above the 5-day moving average. That's my short-term breath gauge, and I kind of call that the fear FOMO indicator. And that flashed to 0.99 on the close of the 8th, and that was the lowest I've seen it in 5 years. So short-term to me, that was like screaming like, okay, there really isn't that much lower the market could go. Now, I mean, it could, but based on that, it was just super oversold. So that's like the short-term breath signal that I use. And then some other things, just like the NASDAQ McClellan oscillator, the NYSE McClellan oscillator, those are living below -0 for a couple weeks. Again, super oversold. The NASI, the NASDAQ McClellan Summation Index, that was nearing 2023 lows, net new lows across all the indexes. Those got some of the lowest readings since 2020. So we're talking about stocks in the market were hitting 2020 net new low levels. So again, like how much worse could it get on a short-term basis? And then some other things, CNN fear and greed, that was at 4, extreme fear. People were scared. And you could look at the NAM exposure index, that was sub 50. So, less than half people had exposure to the markets. And, sometimes you see if the market starts to bottom out, there's a lot of capital that needs to chase. And then that AAII bull bear reading, that's another sentiment indicator that I use. And that was super bearish. That was like highest bearish readings in years at like 60%. But I call all of those secondary indicators for a reason, and I always need price to line up. So on that Monday gap down, we bounced right off 2021 highs. So when you think about it, like number one, a lot of people are scared in the market. Sentiment was very fearful. No one wanted to hold overnight. And then you had a Monday morning gap down, third gap down in a row to 2021 highs, and it bounced right off there perfectly. So kind of for a short-term bounce, everything kind of lined up. You also had You also had the VIX spiking up to 60, again, highest level since that August 5th yen carry low. So to me, like a lot of things signal towards the S&P maybe finding a short-term low. Breath was super oversold. You were coming into 2021 highs, and then you also reclaimed the August 5th lows as well in that weekly candle. And then I'll just put SPY to show some volume. And then you also had huge volume on that week too. Again, another signal that, hey, maybe the market's short term over extended to the downside, and there may be a bounce in store. So yeah, kind of everything lined up. And in the tweet, I just said, to me, it seems like the pain trade's higher at this point in the market. And even with all these breath charts, you can use it two ways. Maybe you're looking to get exposure in, and maybe the market's ready to reverse. Or two, it's definitely not the place to be shorting when everything's so oversold like that. There's always a big debate on breath charts. Should you use them? Should you not? There's a huge edge for them for me. Track them religiously every day for years now. And so I kind of recognize when they're useful, and they're especially useful in times like this when there's a lot of emotions in the market. So you can get max fear, and you can also get max euphoria quick, versus in a trending bull market in 2023 onward. If they're overbought, doesn't really concern me. I'm going to trade based on the leaders, the feedback from the trades, the technical setups in the market. But last week, all those breath indicators lining up, plus the S&P finding support at that 2021 high, the odds to me were a little bit more likely that the market was maybe going to find a footing there. And what's going to happen next, we'll see.
Yeah, and I think what's really it's just striking there is actually how much information you've used to come up with your thesis. I think it's probably up past the level of some of us. Like I don't know if I've got the capacity to do that, but I think it's certainly incredible that you have to come up with an informed decision. And then from that, like through obviously your fund, are you able to get exposure on like such a short-term basis? Because I guess something like that could potentially be a day trade, or perhaps a very short term, maybe like
yeah, I can give you what we did. So all those things were lined up, and obviously as a portfolio manager, we're obviously tracking against the benchmark, right? So you want to always aiming for outperformance, but if thesis is there, it's a pretty low risk spot. So with all that put together, we in the fund, we took a position in SPLG. It's a little bit lower beta on S&P, and basically, with a stop at those lows, and if it started to come back, we could always hedge it as well. So that was our plan, and we still own that today, and just continue to raise the stop or look to hedge if it starts to turn, on strength to lock some gains in. But yeah, SPLG was the vehicle there, which is, a little bit more unconventional, but it's the market that we're in right now, so you have to adapt.
Yeah, and it's interesting the vehicles that you are using as well, and I think that's something that I've certainly noticed. Like on that Monday, for example, like I personally traded TQQQ, just because like I felt like it was easier just to have my risk concentrated in one name, which was broad, as opposed to trying to pick another vehicle.
Especially in this type of market, like you're better off just kind of trading the broad index too, because it's a lot easier, especially when there's not a lot of stocks setting up either.
Yeah, and just touching on that and just building on that, so we've touched on this being the news at the moment, the uncertainty. Obviously, there's so much going on. what is your like? How is that looking in terms of like how are you feeling about your exposure first of all, and you know, and how are you acting and trying to, I suppose, interpret that news as well? Because it just seems wild to me at the moment. Obviously, I'm an outsider looking over at the US, but like you'll have 1 minute where there's a rumor of something, the next minute it's denied, then all of a sudden, actually, no, actually it is happening. And for someone like obviously trying to, you know, who's trying to run a book, that's got to be a tough environment, right?
For sure. Yeah, it's just trade smaller, um, less overnight risk because, like you said, like technicals don't matter when a news thing can come out of left field at any time. So really, just trying to be patient, use less size, and kind of just take the market day by day. I know I tweeted the strong opinions loosely held, and I just talked about going into every trading day with a bull and bear case because right that Wednesday last week, a 12% intraday move is insane. So imagine if you're short that day, you're getting crushed. So just shortening the time horizon, having a lot of cash, less position size, and really just trying to be patient. Ted, you can
Yeah, I
probably
think a
add some
big
stuff.
yeah, I think a big thing is acknowledging that you don't have to be in the markets every single day or even every single week, and that having a large cash pile or even be completely in cash, waiting for the volatility to settle, waiting for the news cycle to settle, and for, I mean, like you said, the news and the administration to kind of pave a path for that's more certain. And we have the luxury to do that at Revere. Sets us apart from other managers who sometimes have to stay fully allocated. Some even just throw their clients into mutual funds and don't even look at the markets. And they pretty much just convince their clients that they're for the long run and they're not really managing risk. But for us, we have the luxury and we have the philosophy that we can sit out in cash and we have what we want to look for to get back in, like what Connor talked about. Some emerging leading groups and themes which don't really exist right now. Also, an important thing to point out is that in a healthy market, you don't have this volatility. You don't have the Nasdaq moving 10% in a day. That never happens in a healthy market. So you can always have the patience to wait for the volatility to come down, for those clean and simple bases and setups, the themes to emerge, and then you can start to get involved. And the key is progressive exposure. You start a little small, sprinkle a few bets here or there. Once it starts working, the feedback is telling you you're making some money. You can add on to those positions or take some other positions and just slowly let the markets force you back in.
And I think
Yeah,
that's again, I think
and
that's such a strong message from you two that it, because I think like part of the issue sometimes is that we feel, and I think particularly like I think a lot of our audience, a lot of IU are probably more on the day trade side. Well, I mean,
Yeah.
with a, you know, we're sprinkling a swing trading as well, and that's one of the things actually that most day traders want to do is they want to swing more.
yeah,
But in terms of like, it's very difficult. I think like inaction is very challenging. So I think
Yeah.
it's such a powerful message that both of you are like, hey, it's fine.
mhm,
Yeah, a big concept is exactly what you said. Inaction is actually action. Less is more is another little catchy phrase, and just a huge part of like if you are transitioning to day trading to swing trading or position trading, it's making sure you set your expectations correctly. There's going to be weeks that you don't do anything or very little, and that's just the nature of swing trading, position trading. And every year, typically, on average, from our studies, you have this 6 to 12 week period where you can do very, very well. And that 6 to 12 week period in a very, very good year maybe comes 3 times. In
yep.
in a mediocre year, maybe once. In a very bad year, you can even have zero like momentum uptrends. And you just have to sit. You just have to get yourself to sit and be patient.
Tough. Sorry, Connor, I cut you off there.
Oh no, I was just agreeing with what Ted said.
Oh, fantastic. Well, I mean, I'm just trying to think, is there anything that we haven't ticked off tonight? I mean, we covered most things. I mean, first of all, I have genuinely, it's been so informative. I've absolutely loved every minute. You two are ridiculously knowledgeable, and and I think sometimes like you know, you meet people like yourselves and you're thinking it's quite frightening. This is what we're up against. So that's I mean, that's great for me. It's certainly always a kick up the ass, and a sign to work harder. So was there anything? I mean, any?
Oh, I know what I was meant to say. I lost train of my thought, but talking about sitting out in the market and something at Revere, we have something called the trend gauge. So you can create just such an easy mental model of what it looks like for when you should be in the market and when you shouldn't. So it's got four things. Number one is leaders, and that's just basically our interpretation of growth stocks and leaders in the market. In a good market, we can always make a 21 over 21 list. And basically what that comprises is of 21 stocks above the 21-day moving average across various different industry groups. And so that's a signal in itself when we start, when we do the weekend work and it's like, oh, I'm seeing Philip Morris, a tobacco stock. I'm seeing, BJ's, the retailer. When you're starting to see those stocks, you're seeing like a lot of staples dominate the list, then it's probably like, yeah, the market's risk off. So leaders is number one, and then just simple trend gauges on the indexes, right? Is the S&P above the 21? Is the S&P above the 50-day or the 200-day moving average? And all four of those have had the red arrow for a couple weeks now. And we always say our dual mandate is grow assets in uptrends and protect in downtrends. And, we certainly been in protection mode and sprinkling in some shorts along with being patient. So that's really where the focus has been for now. But like I said, day by day, because this market's fast. So you never know. It could just turn around quick.
Yeah. No,
Yeah, just like
sorry.
just to add one last thing, you talk about how we're dealing with the volatility and the crazy news cycle. And it kind of comes down to like one little piece of philosophy. You got to focus on what you can control and forget the rest, forget what you can't change. And for us, that's position sizing, managing risk, sitting out, not worrying about every single little piece of news because we can't control what the administration does or the reaction to the markets. And eventually it will all resort itself back. And at sometimes it might seem like the end of the world, but that's exactly when you have to, in your head, convince yourself that when you're starting to think those thoughts, you probably should start thinking the opposite direction of better times ahead.
Yeah, incredibly well said. Tonight's been absolutely fascinating. You're both absolutely amazing. It's been an absolute privilege to chat to you both. Where can everyone find you?
Yeah, you can find me on X at Connor J Bates _. And then, yeah, you can find us revereasset.com, Connor at revereasset.com. We do nightly videos on YouTube as well. Every day the market's open, we do an insight video along with Friday podcast. And then we also do a weekend video as well. So we're pretty active on social media, sharing market thoughts, what we're doing with the portfolios. And yeah, but we love when people reach out.
Yep, exactly. And for myself, Ted H. Zhang on X, and then Ted at revereasset.com. And if you also want to speak to our bosses, Don and Dan at revereasset.com as well. And yeah, we're like probably the most transparent advisor or money managers there are. Like Connor said, 7 videos a week, 5 every single day the markets are open, 1 weekly Friday podcast. And you always get our thoughts through our X, our YouTube channels, and it's exactly.
I'm just wondering, do you have any free time? Do you have any hobbies? Because it just sounds like that is and such an immense amount of work. It's incredible.
Well, you guys do a lot of work at IU too.
Yeah, well, we try. Yeah. Well, it's one of those like, and so as a closing point, like as much as like we're talking about inaction, it's still very much turning up every single day.
Exactly.
Definitely.
And like I got punished last week. I had a quiet Wednesday, so I took off like a couple hours early, and then like there's just like a news drop, and then you miss that move. It's a huge move, and you're like, it's frustrating. But on that note, thank you so much. It's been an absolute privilege again. Yeah, best of luck to you both. I hope we can do this again. Hopefully we get
love to.
Definitely.
Perhaps we'll get a bit of a shift in 6 months, and then we can review another 6 months worth of the markets. Thank you both, and thanks everyone.
Thanks for having us on.
Thank you, Sam. Thanks for having us on.
Thank you both. Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.